Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do, and so we begin. Today is Friday, July 26, 2024. In today's episode, we're actually going to start with a request from a comment from YouTube wanting me to look over XRP, so I'll start with that. From a very basic charting standpoint, we obviously have a bull flag here. That does look bullish. Zooming out to a very long-term weekly chart of this, we might be able to make a trend line looking something like this, which obviously resembles a wedge pattern here. And so, just the pattern alone looks like we could be definitely on the verge of a breakout here. Personally, I personally will stay cautious, and I'm not going to participate in XRP or any altcoins right now, simply because risk assets, while the Fed is just starting their cutting cycle, it seems extremely dangerous to me. Could XRP go way up from here? Yeah, it could. Will it necessarily? Definitely not. And I wouldn't personally participate in this. I have enough trouble dealing with the value of Bitcoin and trusting if Bitcoin can maintain its supposed value to the dollar. I mean, people are paying that many dollars for Bitcoins right now, but this is even an extension of that. A while back, I said that NFTs, when it comes to NFTs, those are, if you remember them now, right? We all kind of forgot about them. Were images people, it's like online art that has a special code attached to it, and people were bidding those up, and I had been talking about them, not on this show, but to people, that I wouldn't touch. I said I wouldn't touch NFTs with a 40-foot digital pole. Again, XRP is even more risky and is going to have even more beta, obviously, than Bitcoin. And in a crypto winter or a crash, I would expect to potentially lose all of my investment, or practically all of my investment in XRP. It's way too dangerous, and the risk for me isn't worth the reward, even with a small sum of money on a personal basis. But if you choose to participate in this, I wish you the best of luck. Moving on, the themes of the day. Nothing burger, PCE. Personal consumption expenditures came out exactly expected. Not one of the numbers was different by 1/10. And so, markets kind of went even more the way I look at it, even more neutral today than they were yesterday. Preparing for a report like this, markets tend to go to what I think of as their kind of center neutral position. And because they came out exactly as expected, it's almost like things moved even more to their a more neutral standpoint, or stance, rather. The S&P 500 on a weekly basis, this pattern, 2 red candles in a row, it looks bearish. Again, I'm going to repeat what I said yesterday. It seems to me that, people, including myself, saw what happened the last time we had a dip that looked like it wanted to go down, and it turned into a rip-your-face-off rally. And so I expect I expect there to be plenty of buyers here, potentially maybe even getting like something like a double top, something like that, if markets are going to roll over bearish. I think I'm confident that markets will get very bearish very soon, but we'll see. To repeat, on the VIX futures curve, October is strangely higher than November and December, showing that market participants are expecting seasonality of October bearishness to kick in, on top of the fact that the first rate cut is basically priced guaranteed right now for the September meeting. So, and then once the cuts start and the economy just starts to not look strong at all, people kind of they freak out a little bit, and that's what usually causes these bear markets or large corrections. And so I'm fully expecting at least that, if not it turning into a bear market for potentially a long time. For now, for the most part though, for this moment in time, the market is not scared. It's not scared, and it's not in a bear market right now. So it is what it is. I'm not short anything right now. Speaking of the VIX, we had this very nice wedge pattern that broke out that I took advantage of and sold off my call positions on last Friday on this. Got a handsome reward out of it for sure. And then it continued up, and we have a pretty big red candle here. I have no idea where the VIX is going to be going next week, but I'm guessing down, only because it seems like we're still in risk on mode. HYT junk bonds, this is starting to coil up very tightly. Sorry, I had to reload the page. It's coiling up very, very, very tightly here. And the way I look at it is it cannot, I don't think it can break out to the upside here. The main reason I have for that is credit spreads between Treasury securities and BAA bonds are so thin right now. They're like historically thin. They're very, very low. It wouldn't actually be possible, for example, for lower grade credit bonds to be worth more, in other words, have a lower yield than their corresponding treasuries. That's not really possible unless you believe a company is going to be able to pay you more securely than the government, which can basically create money out of thin air, and and those bonds are guaranteed by the government. And so I cannot imagine this breaking out to the upside. And since we're coiling up here so much, the longer we coil sideways here, I think the bigger the break is going to be to the downside. And when that happens, that's my big signal that yes, things are definitely bearish, and I might try to take advantage of that when we get there. But we're not there yet. Right now, because it's still going sideways, I can't get overly bearish. I gotta say that the S&P 500 could potentially get to another high here. Leading indicator XHB, we just had a sorry, I had to reload. We just had a bullish, this is very obvious, bull flag. We broke out on what it looks like Monday and Tuesday. Are we missing days? Oh, this is a weekly chart. Sorry about that. This is the daily chart. So, we had a very clear, very, very clear bull flag here that broke out to the upside as of the 11th of July, and we've been going up ever since. And then another smaller bear flag that we broke out of today. So this is looking bullish here. There's a lot of confidence right now in the economy. I'm hearing whispers of experts that have been around a long time that are saying that the institutions, the big money, the insiders are selling like mad because the valuations are just higher than they should be based on the amount of money that companies are able to earn right now and from where we are in the cycle. But the retail investor can push things higher and higher and higher, and they can squeeze people out of their shorts too. and it does happen. That's what can drive it higher. I think it's generally the markets are very stupidly going higher and higher, and it's just like a bigger cliff dive. The higher you go right now, the bigger the fall. And then once you fall, you kind of get that momentum, and you'll likely go too far the other way. And so that gives some credence and to the idea that we might have something like even as much as an 80% correction in the S&P 500. I do not think that's unreasonable. I don't think that's an unreasonable or impossible outcome. It's nowhere near impossible. There's just so many cracks. There's lots of people out there right now that believe that we already are in a recession. Some people feel like they are in a recession because they lost their nice tech job and now they're working 2 or 3 jobs that pay a lot less, and they're struggling to keep up with inflation and everything. And it's pretty clear in the crystal ball and everything that we are headed into some a rough time. But again, the markets, they don't believe this yet. We are now in neutral territory on CNN Fear and Greed Index. I also wanted to point out that the Russell 2000 today had broken out of this pretty clear bull flag pattern to the upside, and so it looks like for now that this, you can barely see it. Maybe I can zoom in and make it a little bigger. This was today's candle right here, this little green thing. So we popped way above here, and so that all signs point to the Russell 2000 continuing higher from here. Not something I'm going to participate in. No way, Jose, not in the environment or part of the business cycle that we're in currently. That's all I have for today's show. Hope you enjoyed. Thank you for watching. Robschild.